What's up? What's up? What's up? What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market because that is simply impossible to do. So, it says here that S&P 500 X out new record amid wave of earnings trade updates. Ooh, I just noticed some losses here today. So it says U.S. stocks closed mixed Tuesday, but the benchmark S&P 500 was able to eke out a new record as Wall Street digested a new batch of earnings, including a tariff warning from General Motors, while also weighing the latest trade developments. So it says there the S&P 500 closed just above the flat line to secure the fresh all-time high of 6,309.62 points. The Nasdaq Composite dropped 0.4% ahead of big tech earnings, while the Dow Jones Industrial Average rose 0.4%. So markets bounced off earlier losses after President Trump announced a new trade deal with the Philippines, and a potential sign that more positive developments on the trade front could be on the horizon. So far, the market has proven resilience in the face of tariff uncertainty, with the S&P 500 and Nasdaq hitting fresh record closes on Monday. Earnings season has been largely upbeat, buoying stocks and sentiment, though the market is now weighing how far the recent rally can run. So earnings results from a wave of companies on Tuesday were mixed. The stocks of General Motors, Philip Morris, RTX, and Lockheed Martin sank after their quarterly results disappointed Wall Street. General Motors reported that a core profit sank over 32% in the second quarter as tariff headwinds sapped $1.1 billion from its results. The big three automaker warned the hit would be deeper in the current quarter, providing food for thought to investors assessing the impact of President Trump's trade policy. So at the same time, Wall Street awaits second quarter results from the Magnificent Seven members, Alphabet and Tesla, on Wednesday. As the valuation of large cap tech stocks soars, investors are hoping for reassurance that the hype around AI is more than just buzz. So meanwhile, the clock is ticking on trade. Trump's August 1 deadline, August 1st, to strike a deal or raise tariff is fast approaching, but progress remains elusive. So talks with India are reportedly deadlocked, while negotiations with the European Union continue to stall. There is some movement on China. Treasury Secretary Scott Bessent said he'll meet with Chinese counterpart next week in Stockholm, with discussions expected to include a possible extension of the August 12 deadline to avoid sharply higher tariffs. And that is it for today, people. That is it. So let's look at some stocks. So Nvidia lost $4.35 today, closing at $167.03. My information technology ETF, FTEC, lost $1.99 today, closing at $202.18. My S&P 500 ETF, SPLG, gained 2 cents, closing out at $73.98. Palantir lost $2.72 today, closing out at $149.07. Tesla gained $3.62 today, closing out at $332.11. Broadcom lost $9.62 today, closing out at $278.59. Apple gained $1.92 today, closing out at $214.40. Meta lost $8.16 today, closing out at $704.81. So yeah, that's pretty much it with the stock market, people, for today. These tariffs seem to have taken a bite out of General Motors, Lockheed Martin, profits, supposedly, right? So we'll see what happens with Google and Tesla on Wednesday when they report their earnings. See if the tariffs have affected them as well. Either way, I'm going to continue to dollar cost average into the stock market. What I've learned and what I've researched and read and heard, you're going to have your ebbs and flows in the stock market. It's going to have your ups and your downs. It's like life. So it's all about how you make it and how you persevere from the downside. And what I have noticed with the stock market is that as long as I continue to invest, do smart investing, stick to my plan, I'm coming out on top. Because actually, my individual stock account, the one that I manage, right, not my 401k plan, because the S&P 500 is only up like a little over like 7.7% year to date, but my individual stock broker's account is up 32%. Like the stocks that I just read off to you guys, well, it probably dropped today. As of yesterday, it was up like 32% year to date. So I'm pretty happy about that. So yeah, you can be in that same boat. But first you have to be able to invest. And before you can invest, you need to get out of debt. You need to get out of personal loan debt. You need to get out of car loan debt. You need to get out of credit card debt. You need to get out of all forms of debt. Because as long as you're paying off debt, you're unable to invest anything into yourself, into the stock market, into your retirement, and so on. So first, tackle your debt. Get out of all forms of debt. And the only way that you can do that is by creating a budget. And your budget is going to start telling your money where to go. Vice you trying to figure out where it all went before the end of the month, right? So start telling your money where to go by creating a budget. And then it's like, say if there's not enough money coming in after taxes within your budget to pay your bill, you may need to, you need to increase your money intake by getting a better job, by taking on possibly a second job. I've seen situations where people have taken on second job, part-time job to clear out their debt. And once their debt is gone, then they stop their part-time job. But either way, you may need more money. So you have to figure that out. Sit down with yourself or your spouse and figure it out. So pay off your debt. And once you get all of your debt paid off, then you want to create 3 to 6 months of living expenses. That is going to be your emergency fund, right? And your emergency fund is there because emergencies will happen. The hot water heater may go out in your home. You may have a flat tire, so on and so forth. Things will happen. So you can use your emergency fund for those situations. And then, God forbid, you get laid off from your job, or something happens with your job and you lose your job. You have 3 to 6 months of living expenses set aside so that you can look for a job and hopefully find one within a couple of weeks or a month, to where you won't deplete through all of your 3 to 6 months of emergency fund, right? So either way, you want that there as a buffer that gives you a solid foundation even through hard times. So once you do that, also when you're paying off debt, it's highly suggested that you stop investing. Stop investing into your company's 401k or your individual stockbroker's account, so that you can allocate all of your money to get rid of those debts. So, but now that you're out of debt and you created your 3 to 6 months of living expenses, now you can start investing. Well, you can start investing 15% of your income to your retirement account as soon as you're out of debt. Then at the same time, you can create your 3 to 6 months of living expenses. You don't have to do it like all in one day. Just work up to your 3 to 6 months of living expenses and don't touch that. And then also, if you have kids, you can invest into your kids' college fund. And then if you have a mortgage, all that money now that you have available, your 3 to 6 months of living expenses is in place. Your kids' college fund is funded. You're investing 15% of your income into your retirement. Now you can tackle your mortgage if you have a mortgage. If you don't have a mortgage, it's okay to rent. It's okay. You do not have to buy a home, especially today. If you buy a mortgage, before it used to be like mortgage payments were similar to rent. So for a lot of people, it made sense to buy a house. Why put that money into rent when you can put that same amount of money towards mortgage. Today, with the interest rates, that's not the case. I'm seeing houses, and where I'm located, I'm seeing condos and houses being rented out for, say, $2,000, maybe close to $3,000. But the mortgage payment on that house or that condo may be $3,000 or $4,500. And then if it's a condo, you also have HOA payments, you know, especially on islands. Hawaii is a prime example. I know people there personally that are paying $2,000 to $3,000 mortgages, and then they have a $1,200 to $1,500 a month or more in HOA fees that would never go away, right? And then they can only rent their houses out for, you know, not even that much. Either way, everyone's situation is different, but there's nothing wrong with renting. If you're renting and you don't want to buy, instead of, you know, you can save up to 20% down on that home, finance the home for 15 years. If not, you can just continue to invest. Here's the thing. Once you're out of debt, you have options. You can do whatever you want to do. So you have to think long and hard about what it is that you want to do, what route you want to go. And once you make that decision, just follow it. And either way, you're going to be okay, because you have remained disciplined enough to get out of debt. You now know the worth of a dollar. You now have control over your finances and your life. You know, just work it out. All right, so I'm going to end this video. So like, comment, subscribe, share this video. Let me know what you think, if you think anything at all. Disclaimer, I'm not a financial advisor. I am debt-free, and I have been debt-free for the last 4 years, where I paid off pretty much $299,000 in, I'm looking at my little board over there, in 27 months and 19 days. I paid off $299,000. I remember I took my bank account down to $11 because I was so ready to get out of debt. And yeah, things have been up and up since then. Again, I'm not a financial advisor, and nor am I pretending to be one. I just have experience in getting out of debt and staying out of debt. I have no debt. Since 2021, April of 2021, I have not had any debt. None. Credit card debt, personal loan debt, car loan debt. I'm still driving the same car. Personal loan debt, no debt. Either way, please consult with a financial advisor before you invest any of your hard-earned money, if you're not 100% sure on how to do it on your own. So consult with one before you invest any of your money, and you should be good to go. All right, so you guys take care. Have a blessed day. Yeah, peace.